Hi, this is Connie from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. Today, I'm going to share with you a question that I've been asked a couple of times this week. I thought it's really useful that I share with you so that you're probably also thinking the same thing. Okay, so the question was, so one of my clients recently did a construction loan with our help. Now, he was building his family home on a piece of land, and in the end, the valuation came back. He probably got 50K more than the cost. So he saw the opportunity, could be used as an investment strategy. So he asked me, what about, I do the same thing, buy a piece of land and build the house on it, and then I unsell that property. Now, I also been asked, for the same question by another client, but they saw, their friends doing that. So I thought, better, clarify this so that you can make an informed decision. Yes, there's, potential margin in the project, especially given it's a flat market. It's really hard to, buy a property and then, build some capital growth without doing much work on the property. So it could be, more people thinking about that. But there's some, pitfalls that I want you to be aware before you go ahead with that option. So a few things you may not know. So firstly, when you, build a property with the intention of selling, it's actually the profit is taxable. So it's unlike an investment property that you're going to hold for a number of years, we haven't got capital gain tax here. But if your intention is to sell the property, then you do need to pay the tax on it. So number one cost is, the income tax based on your tax code, based on your profit you make from that project. Number two, you need to pay GST on that. So that's another 15%. On top of the income tax. Number three would be the agent fee. If you use agent to market your property, you need to pay 3 to 4% as your commission. So these all additional costs, right? So it's not just the building cost, it's other costs as well. Okay. On top of that, bank, if they know your intention is to sell, then they won't lend you the money. The reason behind that is, it takes years for the bank to actually make enough, profit from your loan. The main income they come from is your interest cost. So they charge you interest. Now, on day one, they probably already pay you a few $1,000s as cash back. So they actually lose money on day one. It takes, a couple years for them to break even and then make money from, a couple years' time. So if you, doing a short-term project, say less than a year, they're not making money. There is a department in the banks. They call it property finance, but it's not really for mom and dad kind of a developer. It's really for the big, subdivision or building, apartments or big projects. It's really not for, building one or two dwellings. So the retail department, which you go to borrow for, buying home and investment property, they're not interested in doing, a trade deal. Okay, so you have to go to a non-bank, and we call it finance companies. So you need to borrow from them, and the cost of that is definitely much higher than going to the bank. They will charge you between 1 to 2% of fee based on the amount you borrow, and they also charge you interest costs much higher than the banks. I can't give you a range because it really depends on your projects and depends on the lender, but you would expect, from 7% to, over 10%. Okay, so you will expect higher finance costs if you do that. Now, you may say, maybe I don't tell the bank, I just say, I'm going to build for my family home or investment property, and but I'm still going to sell it later on. Well, the thing is, firstly, we're not honest with the bank, right? So it's not really good from your credit perspective. Now, second thing is, normally you don't really use your personal name to own that property, right? So if you use a company and the company is GST registered, they will see that, so they will say no. And if you not register GST, then it's unlikely you can claim the GST later on. So you already lose money upfront. So yes, you might save some finance cost for that particular transaction, but you end up paying you're paying more, or you get less GST claim, etc. So it's not a really good idea not to tell the bank the true intention. So these are the costs. Now let's talk about the risk. Now depends on where you buy, but in Auckland, for example, it's not a booming market. So when you finish the construction, trying to sell at a premium price, but what if like your neighbors also selling, and they're probably their product is more preferred for whatever the reason, then you have to drop your price because it's a buyer's market, right? So it's really competitive at the moment. So you may not selling at the market price you expected. Now, on the other hand, it's hard to control the cost. Not to mention, even renovation can cause a lot of headaches. Building a house from scratch, even subdivision, if you don't have previous experience, what you budgeted for that project, probably end up with, much more than that, and it could be double the cost, and a lot of them, because you don't know what you don't know, it's really hard to predict. So on one hand, you may not selling at market price. On the other hand, your costs probably gone up, significantly than you budgeted. So your margin could be very little or even negative. So you probably regret, doing that. So that's about the risk as well. Last but not least, when you considering, doing project like that, it's best to consult your accountant first, because they will set up a right entity for you. Normally, they would not recommend using your personal name to do that, because potentially, you will be tempted as a result of doing that commercial activity, which means, later on, if you buy or build an investment property for long-term holds, when you sell it, it's potentially still, subject to pay tax, just because, you were deemed as a developer, in the previous transaction. So your property accountant, it's the best person to talk about the entity structure for that. So there's a lot of things you need to do properly, and you need to plan ahead before you decide to, do that kind of projects. So it doesn't mean, I want to scare you not to do that kind of thing, but I want you to make an informed decision. And if you think it's still a good opportunity to do, why not, right? So our goal is to add value to you and help you make that informed decision. All right, thank you so much for watching. If you find it useful, please feel free to subscribe our YouTube channel and forward that video to your family friend so they can get benefit as well. All right, thank you for watching. I'll see you next time. Bye for now.